Hello to all traders and welcome to another edition of Market Insights. This video has been once again brought to you by Orbex. So pound pairs in particular across the board will be something to keep an eye out for in the next coming trading weeks. And this comes after Boris Johnson has survived a short scare after a Tory rebellion in the last 24 hours that have put him to a no confidence vote. So even though he has survived the vote, a lot of his peers are saying that this is the end of the line for him. And this comes after the partygate scandal, which saw numerous social events happening in Downing Street at the height of the lockdowns during COVID-19 2020 and 2021. So the last time we saw a vote of no confidence was with Theresa May, the previous Prime Minister, in 2018. She did survive this confidence vote. However, she didn't last long in Downing Street after that. And we've seen, as history has shown, all no confidence votes have led to Prime Ministers eventually and not close to the actual vote of actually leaving Downing Street as well. So what will happen to the markets? What will happen to the pound if this does happen? Well, the pound did sink to a 20-month low when Theresa May was pretty much pushed out of Downing Street as well. So will this happen again for Boris Johnson? Well, look at the pound dollar, which is probably, the most active pound trading currency in the market. We've seen this pretty much descent from over a year now, just over from May 2021, where we saw all this big dissension. We had a height of approximately 142, now dropping to 122. So, 20 pounds to the downside. We had a little bit of a lift recently. I'll just zoom it in for better visual effects. We saw a bit of a lift, but now we are seeing these very bearish red candles. We've seen a bit of a eclipse, so this bearish red candle, and then we saw the bulls come in, then bears. Very, very choppy market at the moment. However, from the start of today, if we just bring it down to the 4-hour chart, from the start of today so far, we've seen a very bearish market once again, and this spike to the bottom here, which has hit the lower end of the 124 handle, we could again see more precariousness from a few bears in particular. So we are dropped out of the Ichimoku cloud now. I'm using this indicator at the moment to give me more direction on where I think the market's going to go. So as you can see here, last time we dropped out of the cloud, we saw a big bullish intervention, but now, as you can see, many bearish candlesticks to the downside. And for me, we are looking rather bearish in particular now. We are in a bit of a bear market, and it depends on the next move for Boris Johnson. He is very determined that he will stay in power, he will stay in the office and get on with the things and the targets that he will have to do. But there's been so many turbulent issues from when he took over in office, from Dominic Cummings saying a lot of things about him in court during the COVID-19 lockdowns and other things that have been going on. We don't know how long he's got left in the office, but he is determined to stay there. But just watch out for the pound pairs across the board, because as I said, the last time, and I'll just show you that quickly, the last time that we saw this vote of no confidence, Theresa May was in power, and this was at the end of 2018. And as you can see, we dropped roughly around, it was this area here. So this was a 20-month low from when we last saw this dip. But obviously, as you can see, since then we have gone to lower lows, but we have been at higher highs as well, and this is during Boris Johnson's reign as well. So we'll see if we get any more turbulence to the downside, but it is going to take quite a lot to rectify this fault, and obviously this no confidence is a bit of a stain on his name as well. So we'll see how long he will be in office for. And we can't look at pound dollar without euro dollar. That was my previous analysis, and it actually was working out a bit, because we were seeing this V-shape downside, and we have broken the previous test here of this double bottom, which we saw roughly at the start of the pandemic. So for that to fall even lower means that the euro is in a little bit of trouble against the dollar, at least. Again, like the pound dollar, we have seen a little bit of resurgence recently. However, we are still in a bit of a bearish market, and if we take a look, it is actually more detrimental than the pound dollar, because this was starting in 2020, and we will probably see more of a downside turn. So if we just take a look on the 4-hour chart as well, That was a weekly cut chart, don't forget. We are now trading in the Ichimoku cloud, which gives us an indication that cloud engulfment could see it swing either way. If we do get a test and a breach at the lower border here, I'll be probably seeing that the prices will start dropping below the recent lows that we've seen a few years ago. However, we are now looking at possible divergences, notwithstanding at the moment. We are seeing it go in tandem with the RSI. So a lot of things to take into account, a lot of things to consider. Just keep an eye on the pound pairs. These are going to be moving quite significantly. So we've got, you know, pound yen, euro pound, obviously pound dollar, to name a few, pound Aussie. We'll see what will happen in the next few trading sessions, but keep an eye on all the fundamentals and all the headlines coming out of the UK if you are trading pound pairs, and we'll see what's in store for tomorrow's news. So until then, take care and bye for now.